Trader Roundup, everybody. It's your boy, ICT, Mastermind, Kit. How's it going? All right, we got sound now. That's good. That's good. Let's go. Today, we want to know what's it like to feel in your hands the power of what you've learned, what you're learning. The question he asked, what's it like in your hands? I thought that was very good today. Oh my goodness, I'm really, really excited to hear your thoughts and feedback because the lecture today, I mean, he's flexing on everybody. He's flexing on everybody. Folks who are coming up, I tell you, if you were in my DMs, you know I spoke with you personally, or you had some type of story, you had some type of conversation with me. That makes it a lot easier for me to navigate the discussion to ensure that we're providing high quality content. We're doing it for a reason. We're trying to scale, we're trying to grow, we're trying to get organized. And when you come up here, it's really important that you're asking good questions, that you're providing good value, because what we're doing matters, okay? We're a mastermind and we're here to really, really sharpen the sword. And you're giving the mentor an opportunity to really collect his thoughts on what you are learning. And that's so powerful. We're a classroom of price. That's what Michael's called it. That's what we are. So I'm excited because everyone that I'm bringing up, these are folks I've spoken with. I've pre-screened who is here today, right? And I want to bring up Hunting Wicks. Hunting Wicks, you had a very good conversation today. What did you hear from the ICT mentorship? Because when you hear key levels in time, it's never been more salient than what a key level means than what you heard today. Am I correct, Hunting Ticks? Joe
Yes.
Trades, Hunting
Hi,
Ticks.
hi, hi, hi,
Yes,
everybody.
sir. Yes,
Can you
sir.
hear me? Hope everyone had a nice trading day. Yes, definitely it resonate with me 100% because these are the exact level that I'm on my chart, and you know this for having spoken with me. So it definitely resonate, and I can even more resonate with his song. And yeah, getting stopped, trying to secure a bit of profit too early, and then getting stopped just to see price going in the direction I want to. So yes, I can definitely resonate with the content of today mentorship for sure. And how it feels in the end. It's like the precision is getting better, but yes, it's just like because of the uncertainty, sometimes we just rush and we just want like to bring our stuff down, secure some profit, and hope that the trade carry on. But yeah, then sometimes we just get wicked out and then just to see it going the other way. So the precision and the prediction is 100% on site. After it's all about managing stops and also managing the leverage. So that's the work in progress right now.
Okay. I like that. I like that. I want to keep the conversation going, keep it flowing. I like it. Joe Trades, come on up. Stay here. Hunting Ticks, we'll come back to you. Joe Trades, and then Slick Rick. We'll come to Slick Rick in 1 second here. Joe Trades, you there?
Hello, hello, Kate. What's up?
Not much, buddy. What were your thoughts and 2 cents? What did you hear today?
I just learned something really, really like good today, which is like I shouldn't be like in a rush and always did is like always I should wait like for the right move, you know. And as I saw today, it was like on longs before like 9:30, and I was targeting like the London highs, and I did like was my fifth day like with Alpha Future, so now I'm eligible for payout, babe. I'm eligible for payout there. Like this is crazy, you know. And yeah, it was good. So I just waited like for ICT to come up and talk about today what's really was happening with the price and all that. And I find out like it was a part of Judah swing, and it's good. It's good. Like I saw like my my model is about like Judah swing, and I'm doing really great with it.
That's awesome. That's awesome.
Yeah. So this is what I learned today. So I just gotta like stick with my open range gap and just targeting the 50%, and that's it. Thank you, ICC. I thank you for everything. Like I'm happy as fuck.
Yeah, I mean, if you didn't believe in the RTH gap, if you were not a fan or a believer of the N dog, of the N wog, of gap theory, of where and how price and an unrealized range, what happens between gap to gap. I mean, the conversation, the mentorship, it's never been more clear the strength of the term of a key level. How many times have I talked to people, or how many times has there been questions? Kid, no, but kid, what's a key level? What's a key level? It's so obtuse, but it's really not, right? Not when you know after today. You know what a key level is today. I mean, you could retitle today's lecture Key Levels by Michael Huddleston, right?
Yeah, it's true. It's true.
I'm just saying, like, I've been on social media for a long time, and I know a lot of folks that like to obfuscate and they like to hide behind broad, loose terms. Key level has been a mask that people have hidden behind as far as pay for my mentorship and learn what the key level really is. Well, boy, oh boy, the key level, boys and girls. That was today's lecture. For me, that was, you could just like everything. And having worked with so many folks, like I really embrace this term of high time frame key level. So many times within our community, you get public mentorship folks who hear private mentorship folks say words like key level. And there's this level of envy of what the fuck do they mean? Slick Rick, jump on up here.
What's going on,
Hey,
Kit? How you
nah,
doing?
I'm doing very good. Nico Suarez, you're coming up next, buddy. But Slick Rick, what's the word? I really like your logo, by the way.
Thank you, man. Did that this weekend. Man, key levels is all what it's all about. I've had a really tough time the last 2 weeks finding entries just because prices just keep running every morning. I'm a 2024 mentorship, so I'm always looking for that ORG 50%, and we haven't been getting it as of late. So I'll usually jump to next level of liquidity, and it's just been a really tough. So it was nice to hear Michael say, you know. How you got to be patient, and I've really been that's really resonated with me. The fact that I've maybe taken maybe 3 trades in the last 2 weeks. So for everybody else having a hard time with the entries, it's all good, man. Just be patient. Enter
So,
when you're confident.
so time and a key level, right? Time and a key level. Now a key level means
Exactly.
something. There's a specification after today, boys and girls. And again, I like to at least, I don't want to overstate what I personally believe is the importance. And I know I can, like, obviously as the host, I can get really amped up and whatnot. But at least for me personally, there he is. This was the specifications of what a key level is within the community that I know from 15-year-old students to 55-year-old students. After today, there is no question or doubt. So, Michael, thank you for that. Thank you.
How's everybody doing? Can you guys hear me?
Excellent, excellent, excellent. How you doing? High five, buddy. High five.
Thank you, thank you. I was having some technical difficulties. I couldn't hear you, and I couldn't ask for the speaker tab. I had to come in and out of this thing a few times.
I started it and had to come back myself. So X is undefeated, buddy.
Yeah. So anyway, I'm glad you guys could see what we were focusing on today, and it's important for you to know that these levels are repeating phenomenon. They're not hidden from you. They're very specific things. They're not complicated. And by having them, it gives you a grid. Okay. And on that grid, over the last several days, it's all you need to be worrying about. If you know what you're looking for in terms of where price may gravitate to, in other words, the draw on liquidity, it doesn't matter if you're trading in a 1 hour range, scalping. It doesn't matter if you're trading the PM session, the lunch macro, or the morning session, or London, or pre-session. If your PD arrays don't overlap and lay on top of some key level, like a gradient level in efficiency, like a new week opening gap, a very large, significant first presented fair value gap, new day opening gap, opening range gap, like the regular trading hours opening range gap. You can see now that there is a usefulness to them where everybody else that would be using it, like they all, like orbs, the big buzzword in the last 2 years, opening range breakouts. Have you noticed that we're not breaking out anything? Like we're not trying to guess a breakout. We're waiting for price to trade to a PD array that's laying on top of one of these levels. And the precision that what we're looking for and how it delivers off of that, there's no competition. There's literally nothing like this. And it gives you clarity. It gives you a reason to sit on your hands and wait for a very specific thing because you're anticipating. You're not reacting. You're not reacting to a breakout. You're not looking for a break and retest. Okay? You're looking for a level to trade to that we're already waiting for. We're stalking. That line at that time is the watering hole. We want to see the antelope come down here and get a drink. And then it runs. And we know what we're looking for because of the draw. You can look at a crowd of animals. We're not at a watering hole. If you know there's crocodiles in there, and a cheetah, a lion, comes at them from one side, they're not just going to jump in that water. They're going to look for the easiest point of escape with the least amount of resistance. That's low resistance liquidity run conditions. They're not going to go in that crocodile water unless they have to. That's the last resort. Well, if you're taking trades based on a last resort, I got to make money because I got to pay my bills. I quit my job because I'm trying to make money. See how that complicates everything? You're forcing high resistance liquidity run conditions in markets that may not be high resistance. So we're looking for very specific things relative to time and price. Price are based on these key levels. Okay, these very specific quadrant levels. If you're not looking at price like this, and you're trying to pretend that you know my stuff, and you're using order blocks and fair value gaps and stuff, you're guessing, and that's why you're failing. That's why you're not seeing the consistency. That's why you're not seeing precision. That's why you are struggling, and you're not finding the confidence and continuity that's available to you if you start doing it the right way. So I'm anxious to hear, what people see in this. Do they see there? If you don't see there's any value in it, then tell me. But tell me why you don't see it. But if you do see value in this, or if you see a change in the direction of how you're going to look at price action using them, that's what I'm here for tonight.
So the term PD array matrix was put on its head and spun all around like a top in today's lecture. That's what happened. You literally blew the entire community's mind. And me as such an ardent follower who is so in love with all of your concepts. Tonight's lecture, you literally like the emoji where there's like the mind blown thing, that emoji blown. Yeah, that was tonight. That was literally the term key level and time. Time and key levels were explained in a way in today's lecture that I think it's very difficult, even for a newbie, to really be like, wow, okay. And then if you've been studying with Michael for a long time, matrix, PD array matrix, grid, a matrix or a grid. And then these arrays that are forming, where are they forming? Why do only certain ones matter? Why is there a space of where your no man's land was what Michael referred to in the lecture today? Because you are. But if you're not part of the mastermind, if you don't understand the mentorship and how to trade the correct way of what a correct key level is at the correct time and price, ladies and gentlemen, has been unlocked and explained by the mentor. That's my TED Talk. Let me bring up Nico Suarez.
What's up, Kit?
Nico, give me your thoughts and 2 cents on today, pretty please.
Man, today's video was awesome. It answered so many questions for me, and honestly, like What I got from it was possibly like an entry mechanism.
No, don't. Oh,
I don't
don't,
know
don't, don't,
who did that, but
don't do that.
I was gonna say an entry mechanism for sharp reversal. That was definitely key for me, like a way to enter on a sharp reversal. Like I was kind of trying to figure out a way to do that. And also the definition of an inside range and what it means going forward is definitely key as well. I thought it was amazing. A lot of good information for sure.
I appreciate
For
that.
sure. Absolutely. No, thank you, Michael. I appreciate you.
So, Nico, can you nerd out with me a little bit, real quick?
Yeah, yeah. So when it comes to like turtle soups, what I understood at least for sharp reversal was like whenever obviously there has to be a lot of things aligning, like the higher time frame bias, and then also making sure the quadrants align into the PD array, which we were just talking about. And then I don't know if I understood it correctly, but as the first candle starts hitting the PD array, manipulating like liquidity, the next candle that forms rejecting off the closing of the body, you can kind of enter it off of that. I don't know if I understood it from the way Michael enters off of. That's what he was kind of talking about when he was comparing it to Cameron's entry and stuff. I don't know if I'm correct
When I was talking
when
about
it
the
comes to
swing
that.
highs,
Yeah, yeah.
yeah, yeah, that's a very simplistic approach to just trading price action. No PD arrays required. Just simply knowing where it's likely to draw, and just simply going in there and trading the swing highs or swing lows in difference when you're bullish. So I kind of like gave you a clinic today where you can go in and say, based on what you understand, where you're at in your understanding with this content, you can graduate with what I gave today based on wherever you're at, brand new, or if you've been a veteran with my stuff, now you have a little bit more icing on cake.
Definitely a milestone today.
Yeah,
Definitely
absolutely.
a milestone. Huge specifications unlocked for really the PD array matrix, I think, as defined by Michael. Really, I mean, you're really getting some form of grid or a way in which to lay this out, and it's being specified are SOPs, right? Operating procedures. And as students, that's what we like to be able to kind of follow, like the A, B, C, or the if this, then that, as we kind of walk through price together, right? So, Professor, the tape reader, you've got your hand up, buddy.
Hi, how's it going, everyone?
Pretty good.
Man, I'm I'm actually so happy right now you accepted this, not gonna lie. I actually can't believe this. But anyways, I just wanna say that yeah, the video today of what ICT posted, it's a absolute masterclass. Knowing that when a gradient level is is in alignment with time and price, it's beautiful. But what's it called? I wanted to note something that happened during the PM session in which ICT noted in his one of his previous episodes is that when the daily chart is in a range, it's best and we're looking for lower prices, it's best not to aim for the lows, but rather the imbalance that's above those lows. And that's exactly what happened today in the PM session. Um
What
and
does that
yeah,
What does that make you feel like when you already know you're in a complicated or complex market environment where follow through on price runs is far and few between? And it may be, they call it chop. The chop is real. We're range bounding, whatever. Um, when you see that being taught, and then you experiment in reading price action and see it, what does that feel like? Does it feel does it empower you, or does it feel like, well, there's probably nothing to it? Like, what do you feel from that when you see the concepts and the rules around them being implemented in real time price action?
especially that when it happened today, because it was like 2 episodes ago when you said that, and then I was just, I was looking for it, and it happened exactly today, and I'm like, wow, this shit fucking works, man.
It's like
And I'm
wizardry, isn't
like,
it?
damn, it is. And especially how, because that's one thing I notice is because I take pictures of every of the morning's AM session and PM session every single day. I'm always reviewing it, right? So when I see that's one thing I notice is that on a gradient level, time and a PD array, which is price, they all align. It's beautiful.
It's like magic.
It is, and that's the importance of collecting data and not just believing what you say, but when you actually see it happen, it's a different story.
You'll convince
It's pretty
yourself.
crazy.
If you do the legwork
Yeah.
of collecting the information and back testing it, no one will convince you otherwise. You don't need to watch another video for me hyping it up. You'll be like, I ain't got to see anything more. I know it's there. Now I'm just going to use it.
I know it's pretty crazy. And I'm just so happy that I'm actually speaking right now. I don't think you know how long I've been trying to, speak on this stuff, but no, I'm pretty excited right now.
You ever seen Fight Club?
Damn right I did.
All right, that's where we're at.
Yeah. Don't get giddy like a schoolgirl here, buddy.
I know. But yeah, no, thank you though.
All right, brother.
All right. See you. Bye.
It's good. It's good. It's good. I love it. I love it. We got I mean, MB, man, you should have seen MB's DM to me. And I'm not gonna talk smack, but sometimes we've had some questions that were less than optimal. But my boy MB, man, he just absolutely went in on me in the DMs. But I mean, he made very long, like an essay of why he wanted to come up and why he should come up. So anyway, passionately, MB, with your hand up, how's it going, buddy?
You're right, Kit. I was just trying to demonstrate. It was a joke that we had in like a few trader roundups ago. I wasn't trying to be like salty or anything, but Michael, I just want to first congratulate you of actually sticking to your hour time. Normally you say an hour and it goes on for 2-3 hours. Unfortunately for us, it stopped at an hour. But today was absolutely amazing. I learned so much. It's like Michael. Every time you post a video or do a live, you're talking exactly to me. That's what it feels like for me. I'm pretty sure it feels like that for everyone else because I've seen the comments. Everyone else thinks the exact same. And today we first learned about the inside day PD array. If the body's in between the last trading day's candles, which other people say is that it doesn't matter, it's got to be the wicks inside, but it's not. It's just the bodies, which is good. And typically, you see a one-sided run the day or two after, and mainly it's about the midpoints as well. The midpoints indicates if we will stay in the high resistance conditions, like the daily wick. The low will not be explored until the candle closure below the midpoint. That was a really key point I noted down. That was so key because if you're still above that, you're still bullish. Whereas if you push below it, it shows an urgency to want to go lower and push lower. And also the power of the SMT. Everyone gets this wrong. Everyone uses it in every single circumstance. But you proved today what the high probability SMT is. And what I heard was when there is a liquidity run or high volatility injection like news, typically 9:30 a.m. That's what I heard from the SMT. And it's not always about every single fair value gap or every single PD array. It has to resonate with time and a key level. The key levels are opening range gap high, opening range gap low, and the gradient levels in between them. They're the very key points. I'm not sure, Michael, if we're actually supposed to add in the gradient levels in between. Is that right?
In between what specifically you're asking?
Sorry, the opening range gap high and opening range gap low.
Yes. Yes. If you include those, you're going to get a whole lot more intel because now imagine, say you're in a price run you think should be sustained going higher. So you're in a buy program. By using these gradient levels, if they use some as support where it trades down and there's discount sensitivity there and it rallies off of it while you're expecting price to go higher, eventually they'll stop touching them but still go higher. What is that doing? It's like a gauge, it's like a tachometer. It's giving you real visual representation of institutional order flow accelerating in your favor on side trade. You understand what I'm saying?
Yeah. Thank you for clearing that up. And the wick gradients as well.
Yes.
I think they're really important. As soon as you added that in, that was a game changer for me. And is you also explained about the cookie cutter. It appears so often. I've done so much backtesting on this little cookie cutter. It appears so often. So don't be fearful of missing a price swing, a singular price swing. Even one price swing has got many, like probably I'd say 2 cookie cutters inside a singular price swing at least that I found. So they appear so often. So there's no need to be fearful. Oh, by the way, in the price swing, we'll talk about in time as well. The time's got to resonate with it as well. It can't be every single price swing. That's just never going to happen. And you've got to be complacent with enough.
Yeah.
You have to be complacent with enough. Some people just go out there thinking, "Oh, I made $1,000 today on my eval." Firstly, it's not even your money. It's not even that's probably $50, but I'm not
Focusing
going to
on
go
the
into
skills
that.
pretty important,
Yeah,
right?
sorry, I'm not going to go into that. And you need a draw and stick to that draw until you're proven otherwise. And you have to know why, when, and where. They're the 3 main important bits. Why, when, and where.
Why does that matter, buddy?
Because if you've got to know why you're entering the trade, why are you doing this? Have you traded before? Where's it going? And then when, the time aspect. So what time is it? Is it in a macro, or is it a bad time to trade? And where are you aiming to? What's your short-term objective? What's the easiest objective to get to?
So define to me what a key level means to you.
So a key level is opening range gap high, opening range gap low, and the gradient levels in between, with also including wick quadrants as well and their gradient levels.
All right. That's good. I like that answer, MB. I like that. What do you think about that, Michael? Do you think you did all right on that?
Yeah. I mean, don't forget new week opening gaps and new day opening gaps as well.
Yeah.
See,
Sorry,
that's good. That's good.
supposed to be added in there. That was supposed to be added in
Hey,
there.
so MB, you're gonna get an 8 out of 10 on that. All right, that's 80%. That's a
Thank
solid
you.
B.
Thank you.
You missed 2. You got red lined by the professor there, so that is okay. It is okay. Thank you so much, MB. High five.
Thank
Appreciate
you.
you, buddy.
Thank you, Michael. Thank you, Kurt.
You're very welcome.
I want to bring in SDR, pretty please. SDR.
Hey guys, how y'all doing?
How's it going, buddy?
Well,
So completely change the pace here. Do me a favor. Yes, you know the deal. Pretty please. And anyone else, pretty please, when you come here, just like we have Fight Club rules, I'm going to say, like, you need to know what the introduction is. We all know what you need to do. There's a very clear, succinct thing you need to do, and it's for organization, it's for understanding, it's for context. And Seth, you already know what it is, so pretty please, listen to what each and every person needs to do. Thank you so much, Seth. Welcome to Trader Roundup.
All right, so I have been trading for, less than a year. Or anyway, studying Michael's concepts for less than a year. I'm just starting to get it. Michael, I know you tell us that this is not what you want to hear, but thank you. That's all I can say.
Okay.
Your guidance has had a huge impact on my life, and I'm very grateful. And Kit, you as well.
No, but Seth, you're not following the code. Let's go. Your age, where are you from? How long have you been trading? And how do you engage with price? Those are the 4 specifications.
Okay.
You're supposed to know that, but that's okay. I'm helping
sorry,
remind you. And then you're also supposed to remember that we don't break the rules in Fight Club. So you go ahead and don't remember the rules and then break the rules. But I love you for it.
I'm so
It's
sorry.
okay.
Man. So I'm probably the oldest person in the room. I'm 66. I'm in Southern California.
Wait a minute.
Been trading.
Wait.
Yeah.
You're 66.
I am.
I swear to you, I'm thinking to myself, this guy's 19 years old. He's hopped up on goofballs. He's excited. And you tell me you're older than I am.
I'm really grateful for it. And you know what? Kit said that to me yesterday.
I did.
That's awesome, man.
So I appreciate that. Thank you. All credit to my wife.
There you go.
And
my man.
But yeah, so the way I'm a rookie. I'm doing the simplest stuff that that I feel comfortable with, and that mainly has to do with trading, first of all, only using the 950 to 1010 macro. I'm in California, so, and I do use New York time on my chart. And I look for a change in the state of delivery with a confirmation with a fair value gap and what seems to me to be a sensible liquidity draw. I've been getting very consistent positive results. I'm not getting it right all the time, to be honest. This morning I was kind of hopped up because I had a feeling I would be speaking today, and my head was a little in a weird space, and I didn't wait exactly for the setup. I kind of rushed it and got stopped out, and of course, 15 minutes later, boom, exactly what I've learned from you worked perfectly, and I was like, hey. But
that's still progress. What you were looking for came to fruition.
Yeah.
A lot of people, when they first start, they don't appreciate the fact that even though they weren't participants of that run, either in demo or whatever they're doing with it, they don't look at that as a victory. Like that 95% of the people out there that's on social media that are in the community and trading, they can't do that much. And if they could just focus on getting to that degree of knowing what to look for, everything else will work itself out if they just manage their risk and don't overtrade. Because I'm sorry, I didn't interrupt you.
And I'm really trying to focus on that too, because I have a tendency, like I think many people do probably, to beat myself up and say, oh, God damn it, why didn't you wait? And now I'm getting to the point where I can see, hey, you saw where it was going, you saw your model, you're getting a grasp on this stuff. That is a win. Fortunately, following your advice very strictly and only trading with one micro. So it wasn't a very painful thing. It was just like, okay, onward and forward. Tomorrow I won't make that mistake. Or who knows? I mean, maybe I'll make another mistake. But the point is, and I think what everybody is really emphasizing is, man, these concepts are just there's no way to dispute. And when I first started, probably like a lot of people who were first introduced to your concepts, I was more than a little skeptical.
It's reasonable.
And yeah, I mean, it's just, I don't know. Again, I don't want to make a big production of it. I know you probably hear this a million times a day, but I cannot tell you how grateful I am.
I'm 66. That's why I just come up here and I just break rules, do what I want. I'm 66. Leave me alone.
Yeah, I do what I want. In fact,
it's my excuse, actually.
I think if I remember correctly, yesterday I sent you a pretty nice DM and everything.
Bro, yeah, I
you
was
tried to
very
contact
happy
me,
that you
and
were
I hung
coming
on
up.
you.
I really was. I am happy still. I'm happy. I am very happy, brother.
Schmuck, right? But,
it's just,
thank you.
he's like, I'm going to break all the rules, and I'm 66, so it's all good. No big deal.
Yeah, so sue me.
Sue me, yeah. So sue me. I love that.
But anyway, that's the name of a Japanese restaurant. Anyway, listen, guys, I don't want to take up too much time from other people who can probably contribute a lot more to the community than I can at this point. But I do want to say to people out there who are, beginning and struggling, and give yourself time, try to follow the advice that you're getting for free, and don't overextend yourself. And I'm telling you, if you told me at this point last year that I would be where I am now, I would have said you're crazy.
That's awesome.
So thank you
for sharing that. Thank you.
I appreciate it. Thank you.
I love that. That's so great. Dr. Tony.
Yes, can you hear me?
Yes, sir, we can hear you.
Awesome. I'm 56 and out of Indiana. I've been following ICT for about 3 years. My question is the last daily candle that he referenced today from about 5 days ago on Monday with that long wick going down. What does he think of the next 5 candles closing above that? And they haven't closed down below that yet.
Okay, give me a second. Let me walk over to my screen. I'm not in front of it now.
Oh, sorry.
Okay, so we're looking at
Well,
NQ.
Yep, the long wick that you gave
What
us
time frame?
at the end of your. I was looking at the daily.
Okay, so daily.
That you mentioned that long wick at the end of your presentation today, and my question is, why haven't like all those candles following it? They're all closed above that wick.
Okay, so you're referring to Tuesday's February 17th
Yes.
wick. Okay, and well, if you recall back when we were looking at the last analysis I gave on the daily perspective, I mentioned that fair value gap on the 12th. So it's a big sell side imbalance by sign efficiency.
Yep.
But it's really a small little portion between the 2 wicks of February 11th and February 13th. I told you it would likely probably go up in there and revisit that. It has spent a little bit more time than I would preferred. If it would have went up there and did its business going in halfway and then really started to sell off, that would have been more in line with a low resistance liquidity run conditions, and then we would have a whole lot more easier trading intraday. But because it went up in there, back to that fair value gap, it's reasonable. So the range is defined by that fair value gap on the daily chart and the wick that I outlined here. So it needs to show a willingness to get down below its midpoint or consequent encroachment to facilitate a continuation lower. The reason for price going up above the wick, well, it's simply just because it's got to go from that SIBI that sold off from the high of 25,420 on the 12th of February. That drop down, all it's doing is coming right back up to trade back to a level of short-term premium. So if it's going to have a prolonged move lower, this is still, it's permissible. Let's say it that way. It's not completely alien to a sustained price run lower. It's just, in my opinion, because we're in the type of condition we're in where it's high resistance, it spends too much time inside of these inefficiencies, the fair value gaps, or the candles share the same body range over and over again, like a bar chart, a barcode. It just tells us that we have to wait a little bit longer for really nice price runs, but you can still trade it, obviously. So I'm not sure if I answered your question, but
I guess my question was more about like just looking at that daily chart, and you look from that wick forward, all those, it dips down in the wick a few times, but the bodies of the candles stay above that wick. So to me, I'm thinking like in a normal gap, if it stays, the bodies stay above the 50, the CE line, then it would tend to go upwards rather than down.
Okay, I think I understand what you're saying. So you're looking at it as they're using that wick and the levels inside that wick as a means of accumulating new longs to go higher, and that's what you're asking.
Yes.
Do I see it that way?
Yes.
Okay. I would see it that way if that fair value gap on the 12th wasn't there. And I had already mentioned it before last time we were on live streams, where that is a consideration that I have to see. Now, if it trades above that fair value gap, as I mentioned today, then I'm probably wrong. But as long as it's doing what it's doing here, it's completely permissible. Because that wick, look at the wick on the 11th.
Yes.
Right before that sell side imbalance by sign efficiency, it happened on the 12th on the daily chart for NQ. That wick, if you see what it's done, it's still respecting its consequent encroachment. So every wick defines a range as well. It's being treated as a gap. So that little retracement up, even the highest one on the 20th, last Friday, it's still doing what is reasonable if we're treating that wick on the 11th, the discount wick, which is a premium because it's relative to the price. The only thing it's done is trade up into that, and it's respected it as it should, if it's going to go lower. So again, going back to bias, that's the precedence. You have to know where it's likely to go to. Otherwise, you're going to get tripped up with all the little subtle nuances of every PD array that exists in the range that you're trading.
Got it. Thank you.
You're welcome. Good question.
Great question. Alex, you want to jump in, buddy? You got something from today?
Oh yeah, I mean everything. This video was very nice. Thank you, Michael. Reopened my eyes again more than before. I really like when you talk about, you showed about the SMT, right? You use that for the 930 and the news injection, right? And I remember I saw because you will have the shown the RTH gaps, low and highs for the Tuesday and then Thursday. My question will be for that: how many days, if I want to keep them on the chart, because I saw many times that the price respects those levels and price utilize those levels back, and these levels can be used also for PD arrays to, let's say, for the favorable gaps. Most of the times, price is gonna trade back to that and use this as a reference to see another swing point from there. I want to know how many days should I keep that on my chart. I'm gonna really organize it, right? Because I have a notepad as well. So how many days should I keep that on the chart? Because those levels are very important as well to me. I mean, everything is important from you.
Good question. And I talked about this in the past. I think a couple live streams and round a trader roundup ago. I don't know exactly which one it was, but for completeness sake, I'll say again. The the nature of high frequency trading and the algorithms that are implemented in the marketplace, they use previous week's range and previous days range, not just yesterday's range, but they use the last 3 days. But they have to incorporate, like we are now in today as a Monday. So we have to look at what? We don't have yesterday's trading because it was the weekend. So you have to go back to and default back to last week. So you're going to use 5 as a general rule of thumb. So that way you have a rolling 5 days of data. And if you use that, you'll have everything you ever need in terms of opening range, gap, high, low, and consequent encroachment and gradient levels. You won't have a million of them. You'll have just enough. And if the market's moving around, you'll see that the best setups are going to form around those time frames and those levels agreeing. And when a PD array forms, if it's a fair value gap or an order block, you'll know it's going to work with a high degree of precision because you're blending all elements if you have the draw correct. So simply short answer is 5 rolling days.
5 rolling days. Okay, thank you.
Mm-hmm.
Same as the lecture series delivered gap theory. I mean that I love that it's just as consistent as he is laid out and specified in the past. So 5 gaps are on your chart pretty much at all time, and the 5 most recent gaps are going to be on your chart. And
That goes
another
for new day opening gaps and last 5 weeks on new week opening gaps too.
it's new week opening gaps, new day opening gaps, RTH gaps, and those are the 3 salient things that we're
Just think
talking about.
5. 5
Yes,
is the general rule of thumb, and you'll be good.
that's great. You've got those 3 very specific gaps, and you have those 5 very specific days. Those are points then that you can grade and create these unrealized ranges with these the way you would anchor this grid, right? These matrix, the way you explained it today. I can't just tell you enough, Michael. Again, being in the community for as long as I have, seeing the amount of folks in different private discords, watching how people try and resell your course, the different folks that have a very large YouTube following, that have a very large presence in the ICT community, that are literally just regurgitating what you do, right? Like just saying whatever. And some folks have very large mentorships and make a lot of money, and their spin on it has been key levels in time, and no one's ever really defined a key level before, and it would be used as if, again, like this mask of, well, there's the private side and then there's the public side. There's things that and then there's things that you don't know, and the way that it would be sold or spun to the public would be that. And when you could use an obtuse term like a key level, then you don't know if you're talking about the way you would the way you're grading a range or a gap to gap in the unrealized range. And to me, it's just fascinating because, again, seeing these discords and all of these guys that sell this stuff, today's lecture, literally you dunked on everything you said you were going to do in previous spaces, whether you realize it or not. Like, there are literally Discord owners that are saying, like, well, what do we do now? Like, what do we do now? Because the key level's been discovered and you're
Mm-hmm.
defining what they are. And you see folks that utilize a gold block as a quote unquote key level. You see folks that'll utilize a graded wick that'll put the 33 or the 66 on the same range and call that a key level. But you're seeing very similar these arrays that you're saying nothing else matters until you get to one of these salient levels where the candles are going to be passing through them, where you are going to be then looking for and how to make a decision.
Mm-hmm. It removes the ambiguity, because one of the things I struggled with was I was a support resistance trader when I first started, because that's what the classic textbooks were saying. John Murphy said it's just this easy. Look at this high. I picked out cherry picked candlesticks or open, high, low, and close bars. And I think to myself, wow, this looks so easy. And then I discovered that I wasn't able to ever really pick the right line to draw from and say, well, this is the trend line to buy off of, or this is the support level to buy off of. It would always just wipe me out. It would just go way beyond that. So I knew there had to be something to that line of thinking, but nobody else out there had something that was useful for me. And all the years being prodded, look here, look there, and refining certain things and studying lots of price action, it just made it perfect sense. Because if there is an entity, okay, if there is a composite man, okay, if there's a person out there that's going to try to rig it and control it and keep it within a guideline or parameter that's reasonable, and not let the markets be completely controlled by the speculators, because that's exactly what would happen. The patients would be running the asylum, and they're not going to let that happen. So if that's true, if there is some control mechanism before electronic trading, okay, it's a little bit harder to see. It's not as perfect. It's very close. And that's why I told everybody, when you're afraid that they're going to change things and move to 24 hours trading, I have so many things that they don't have any idea that I have. None of you have that. Yeah, I have it. So if they go to 24 hours and they trade 7 days a week, 24 hours a day, I got stuff for that too. Like, I don't care. Let it happen. I want that to happen, because liquidity will be much more refined. Precision elements will increase through the roof. What we have now, as much as you think there's power, because there's inefficiencies in price action because of the breaks at 5 p.m. to 6 p.m., that's an advantage to some degree, but it also diminishes continuity in price runs, because they know that there's going to be a disruption, and that gap risk will keep traders from holding a position on longer. So they'll pull their liquidity out. So there's no reason for the algorithm to spread and spool higher to draw in more buyers, because it's going to see a vacuum of people pulling away, because they know there's going to be an hour break. And because of all the things that's going on right now, that gap risk could be high. We've seen some days that open up at 6 o'clock and it's 100 handles or more. Well, what happens if you have big positions and it moves against you like that? That could be a lot of money. And when you go to 24 hours trading, if we ever do that, that gap risk goes away. And that means really fast, super smooth price runs would exist as a normalcy. It'll be less likely for prolonged periods of high resistance liquidity run conditions, versus our appetite is more inclined to trying to seek low resistance liquidity run conditions, where it's easy, we can get in and out, it's obvious to see where the draw is, it's obvious to see our entry mechanisms, and we can see where the framework for risk could be identified easily. Right now, we're all being challenged. I'm being challenged because of the conditions that we're in right now. So this structure of looking for what makes a key level, what makes it obvious, so that way we're not guessing. We're all going to have the same levels. That's the point. If I say to you, okay, here, we're going to do an exercise going forward for NQ. Give me your key resistance levels and your support levels on all time frames that you think are going to repel price, and it has to be utilized for that mechanism only. It can't be dilly-dallying around. It's got to use it and have a price run off of it. We're not all going to have the same levels. We're going to have different levels. And that, to me, creates a disparity. Because if it exists like that, then buying and selling pressure by default can't fucking explain away the precision of the way these markets stop on a tick. They turn around and go the other direction, or they start a run right off of this very specific tick. That's what I was looking for, because I went in with the very thing of somebody's in control of this. And I don't need to know who it is right now, but my belief is someone's rigging this because I use the riverboat analogy. Casinos, they used to have an old Mississippi riverboat, and they had casinos on it, and they had rigged machines. You know, when they had the roulette wheel, and they had a mechanism where the operator could step on a paddle, and magnetism would repel the ball. If the majority of the money, he didn't have to know exactly how much is on the table, because the majority of the money is on red. So I have to make sure that red loses. And if I continuously do that, at the end of the night, we make money. I keep my job, I make money, the house makes money. They lose money. But some people's going to win. They don't care about the number. They don't care about that. They care about the red or the black. Or if there's a division between the bets and he can't discern or she can't discern how much money is going on, they only have a couple seconds to game the table. So then green will come up. So neither side wins, and they clean up there too. That's the composite man theory in the market. What are we losing to hurt the people that's in play? Who can money? Who can take it and shove them out?
Hey, Michael.
Yeah.
Michael, we're losing you're getting a little garbly with the network. I'm not sure if you can test and see if you have all of the bars on your phone. It's a little garbly.
That's weird because I'm sitting at 5 bars. Can you hear me?
Okay, well, it sounds better now. It was
Yeah.
just, I don't know, while you were talking, and I didn't mean to interrupt,
No. It's good.
but just for the sake of the conversation, it was inaudible there. There were moments you were saying composite man in the market, and it went, and then you'd keep talking, but thank you. I think we can hear you again, but we had to pause there for a second.
Well,
Okay, no, it's garbly again. It's garbly again, Michael.
I don't know what's going on. I'm literally holding the sun right in front of me.
I know. I feel you, brother. I feel you. I understand. X is undefeated. All I can do is mention what it is. I mean,
I'll come back and see if it clears.
yeah. That's a great idea, brother. That's a great idea. Yeah. Well, X is undefeated. 7:01. I like the time. I like the prime, and we will keep it going and see who else. Slick Rick has his hand up. D. Conrad has his hand up. Do you guys mind conversing, giving us an idea within the conversation without demanding immediate feedback? D. Conrad, you're up first.
Hey, what's going on, kid?
No.
I'm not sure if you can hear me though.
Keep talking. I'm not sure. Do you got all your bars? Like, I mean, X is just we've had issues today, unfortunately, but I mean,
Good evening, everyone. Um, so I just realized that it's been a long time that I've been on this space, your space, kid. Just want to appreciate your what you did, and so I just want to start off by saying that if you're not trading, if you're not learning ICT concepts, I really don't know what you're doing. And yeah, so really, I just wanna, I have some specific levels on I had on my chart that I wanted to talk about, but unfortunately, the day I wanted to come up here on the space, I was caught up with something, so I
I
couldn't
mean,
make it.
real quick. In the comments, the very first thing Michael says is, "Tell me what you learned." Can you do that?
Okay,
Can
of
can,
course.
can you tell him what you learned today, please?
So I just wanna, I don't know.
Uh-oh. D. Conrad. X is undefeated today.
End work.
Jeez.
It's an end work from
Hold on,
December
buddy. I'm sorry.
20,
Can you start over? You broke up
last
on
year
me. I'm sorry.
to 22 December. So it's an end work, and I also just previously, like 21st, there was this BC that was created on the 19th, I guess, So I've had this on my level for a very long time now, and I've just been seeing how price has been using it, reacting off of it very perfectly, and so my thought process around this area was.
Yet I have nothing I can use from this, guys.
Yeah, I'm struggling myself. I'm sorry, guys. It's tech issues, Michael. That's all
Yeah.
I can tell you. Like we're just having a few things. I mean, and I know D Conrad. He was nervous. He really wanted to come up. He had some things he wanted to say. D Conrad, I'm going to bring you back up another time, buddy. X is just undefeated, so we're going to keep it going. Unfortunately, and at 7:04, we heard from Alex. We heard from SDR. We got Mycon with his hand up here. Mycon.
So good morning, kids, and good morning, Michael. My name is Michael, also, you're my namesake, and I'm from Nigeria, and I am 23 this year. And first off, I
And
just want,
how do you get how do you engage with price? Almost perfect. Almost.
so I engage with price with basically identifying price action and mostly I feel like I'm not still good enough, but I tend to um, identify my entry mechanism with the fair value gaps and the change in state of delivery and market structure shift, which some would say is still very like basic, but from where I'm starting,
No,
that's
you
what.
like you like an engulfment and you like the infrastructure of a market maker model, correct?
Yes, sir.
So you want to see an engulfment and then obviously a displacement, right? Lots of
Yes, sir.
Michael's models begin with a displacement, right?
Yes,
So you like
exactly.
to see a displacement and then you begin one of Michael's models typically within taking an entry model within an inefficiency, correct?
Yes, sir.
Okay. Are you utilizing Fibonacci? Are you grading? I'm sorry, I said Fibonacci. I use Fibonacci, but I know we're talking grades, right? So,
Yeah.
are you grading gaps? Are you utilizing key levels? Did you learn something today, my friend?
Um, Currently, I had questions today about today's episode. Basically, since I haven't really like gotten a grasp of it, but I learned one thing, and that was the way we were to use the grid. I don't know how to explain it, but I really
Yeah.
did like learn that way where we would come down from the daily time frame to like the 1 hour, the 2 hours, and we will still like drop our analysis down to the 15 minutes. And I had issues because I don't really know much about the PDRA like that. Like I said like 2 year
Yeah.
last
So
year.
core content month 4. All of it,
Yes.
brother. Core content
So,
month 4. You're going to love it. You're going to
yes.
love
So
core content month 4.
yes, sir. So I currently started learning from Michael from like the 2022 mentorship, and
What
I've been,
happened? Why'd your microphone go muffle?
I guess it's like my.
There you go. Are you speaking on a headphone?
No, not
Okay.
exactly.
Then be careful. Yeah, make sure you don't cover. Make sure you're not covering the mic with your finger, please.
Yes, thank you. So I started learning from ICT from his 2022 mentorship, and all I can say is this is the first time I'll be on your space, kids. Huge shout out to you, and huge shout out to Michael. I have always been wanting to voice out um like
High five! High five! High five! So 2022 is your jam. Is that what you're saying? You like 2022?
yes, I
Is
like 2022
do you
because
have
it
you
was.
watched have you watched episode 12?
Currently, I binged watch, and that was something that Michael caught me in when he said he knows that most of us won't like watch the video as intelligent as he expects us to, but most of us will still come back to watch it again. So
Oh
the
yeah.
way I
Oh yeah.
so the way I kind of like absorb things is when I binge watch, I tend to rewatch them again and digest each episode, no matter how long it takes me to. So like I haven't gotten to episode 12 yet, but I am currently at episode 10. That's where I am, where he talks about he's still talking about like the internal range liquidity where market is drawn to and all that. So I'm still like um
Okay,
learning.
right on, right on, right on. That's good. You're learning. I like it. So, in college, you're still a freshman. Is that fair to say?
um,
You're a freshman.
in my finals actually studying mechanical engineering.
No, no, I appreciate that. I'm referring to in the world of trading within ICT.
Yes, I'm still a
You're
freshman.
okay. Yeah, that's cool. High five, buddy. I mean, you're an engineer by trade, so that's kudos to you. You have an analytical mind. You're applying logical trees, if-then statements. You're applying the ICT concepts in the correct way in which he has taught them. I believe you're trying
Yes,
to.
sir. Yes, sir.
That's good. That's good. That's good. Did you
Yes,
have
sir.
any question though, Maicon? I mean, you have Michael here. Did you have any question? You have a beautiful, wonderful mind. Do you have any questions whatsoever?
There's this one question I've always wanted to ask Michael, and I feel like you could also answer it, Kate. But my question is this: um, when you like for when you started like trading, I know this is not like related to what we're talking about, but it's kind of gonna help me a lot because I'm still like in my finals, and we are going to get into the world like Michael said and see things for ourselves. But like, what's that one thing that keeps you going when you know that you're like stacked up against all odds? Like, what's that one thing that keeps you moving, like keeps telling you in your mind that you've started learning how to trade, and you have to just pull up with it, like you have to go through with it and see it to the end. So like, what motivates you? Thank you.
Well, the only thing that motivated me was I was not going to get out of the situation I was in. I was going to stay working for someone and be subservient to them. They would tell me when I can and can't. They would tell me how much I can get, and I had to listen to everything they said, or I'm made redundant, and they would eliminate me. And I always had a problem with that, and I kept it to myself because it obviously with no real skills going through elementary school, I had the same qualities then. Like I was an independent thinker. I was always excluding myself as an introvert, but I was always scanning the room. And in middle school, same thing. I didn't go to dances to dance. I went there to observe who were going to be the people I'm going to have to concern myself with when I got to high school. And when I got to high school, the same thing. I was not into the jock thing. I was basically isolated. And my mind was, I don't want to be like the rest of all of you. And if all of you are doing all this and nobody's really, you know, taking off and doing exemplary, I need to do things differently. So I wanted to have my own business. And I discovered that this is the perfect business. You don't have to have a warehouse or a place, it's wherever you are. And there's no limit on how much money you can make. There's no one way of doing it. And I knew if I didn't start and if I didn't stick with it, I would not be moving forward. And if you're not moving forward, you're stagnant. If you're stagnant, you're falling behind. Everybody else is going to pass you by, and life will pass you by. And I wanted to be successful, and I wanted to have it from my own hands. I didn't want to have to get it from a promotion. I didn't want to have to rely on a job. I didn't want to rely on someone telling me I can and can't. So that was the motivation for me, and I just poured myself into it, and you guys are getting to see the fruits of it.
Thank you so very much, Michael. Thank you so very much. I really really do appreciate, and thank you for what you've been doing so far in like this coming years, because I don't think I would have ever decided to go into trading if I had never seen your mentorship. I have like a couple of my colleagues also in like various faculties where I study my major, and we are all doing well. We are like a small group. All of us, started with the 2022 mentorship, and we are doing really, really well. And I'm just like happy to say that, and I'm proud to be, one of your students, even though like I didn't get into your paid mentorship, but for the fact that I had to spend a lot of time on the YouTube, I really do enjoy your conversations and your lectures. Big thank you, Michael. Thank you so very much, and thank you to Keith for giving me this opportunity to be up here. I'm still very nervous because this is the first time I'm conversing with like you two guys, and it is very very shocking. So thank you so very much.
I don't know about you, but I got goosebumps. That was so heartwarming. That was beautiful, buddy. You got a brilliant young mind, and you're working hard. And I want to say one thing that I just want to add quickly. Something that motivates me personally is I burnt all the bridges. There was no second anything. There was never ever going to be anything, but I was going to be successful in trading. I I really lost myself multiple times in that effort. And I'm not afraid. I'm humble enough to say I lost myself. I lost relationships. I had a lot of very large swings within the market, within wins and losses, within relationships, and within ups and downs, buying things and losing things. And it was a pretty wild, rocky ride, but it was one that I was always committed to. And I think today at this point, it's partially defined who and what I am. So it's just there's no like you can't once you're in, you're in. That's the thing. Once you have what you have, once you reach a certain level, it it it's part of you, and it's I'm defined by what I know within the market and how I engage within the market. So um, I I humbly submit to the market each day in that regard. So that's what motivates me. So
Yeah, thank you so very much once again. Let me quickly, go back to the listener session and, hear a lot from you guys. Much love to every ICT student that's out here. And thankfully, thankfully that ICT, has brought us up in the way of the Lord also. You know, y'all would make it and like y'all would succeed. Just, be consistent and pray to God always, as Michael would always say. So thank you very much, guys.
lovely, Mycon. Love having you on, buddy. It was a great convo.
Thank you for me.
Blaster FX. Want to bring you up next.
Hello, you hear me,
How
kid?
you doing, buddy?
I
Haven't
am
talked to
good.
you for a minute.
Finally, I can talk.
I know you. I knew you've been wanting to come up, bro. I mean,
Yeah, yeah. Hello, kid. Hello, Michael. Thank you for bringing me up. First thing, excuse my language because this is not
you're
my mother
doing
language.
great. You're doing great, Blaster. Don't stress.
Thank you, kid. My question is about price, time and price. Every time I see Michael saying about time and price, my model, I use 7 o'clock a.m. model. I looking for sell side and buy side liquidity, like equal highs, equal lows, and I wait until he take equal lows or like sell side or buy side liquidity. Then I attack the another side like sell side liquidity. But also I am looking for the RTH gap. If I see the high of the RTH gap, it's in the same level of the buy side liquidity. This is give me information. This is the the price run. He will go to there. And my only question is how I connect price and time, or time and price.
Blaster FX. Did you get a chance to watch today's lecture?
Actually, no, because Ramadan and because
Oh!
I will see it. Sure.
No, it's all good, buddy. Hey, let me give you a high five. Let me give you a high five real quick, bro, and just tell you
Thank
today is the day that you will learn about time and price, about key levels, and about key times at key levels, where when you're going to be looking for specific things to happen.
Sure, I will see the video, but
Yeah, well,
I
yeah.
jump in.
Here's the thing, buddy. You can't not have watched today and then come up here and ask a question that today's lecture answered, right?
Yeah, sure, but I am hurry to tell to you and Michael and
Well, okay. That's fair. That's fair. You're trying to ask a good question and you want to engage with Michael, and that's why that's your question. Yeah.
yeah.
I
Okay.
think when you watched the video from today, a lot of the questions or a lot of the things that you think that time and price was or what you thought it was, you're going to see that it was probably not as complicated or complex as you were trying to make it out to be.
So true. Today was simplified, brother. Oh my gosh. Like
I will go to see the video. Thank you, Kit. If I have another question, another space, I will say it.
yeah, buddy, you're welcome back up, Blaster. You know that. I mean, hey,
Yeah,
you didn't say where you were from though when you came
yeah.
up.
I am. My name is Mahmoud. I am 33 years old. I'm from Palestine, actually.
Okay, good job. Thank you.
Thank you too. Thank you, Michael. Thank to everyone here,
You're very welcome.
and have a good day.
You too, buddy. Like I said, you're welcome to come up anytime. High five.
Thank you. High five. High five,
Okay.
kid.
Hey, Simba, you're up next, buddy. Simba.
Hello everyone, can you
Rawr.
listen to me?
You there, buddy?
Hey yo, what's up everyone?
Hey, your microphone's really low
Yeah,
and you're echoing.
oh,
Do you have an earbud in?
nah, I'm talking with the mic, man.
Okay.
Can you listen to me well?
I'm going to mute and I'm going to hope you can talk loud. And then when you get done talking, you have to go on mute so that you don't echo.
Okay, bro. Okay, I will try my best. Can you listen to me, bro?
Yes, sir. Go ahead and talk loud.
Okay, I'm trying my best. Oh, everyone, I hope you're doing good. It's a privilege for me to be here, man. I've been praying. I've been asking God last week, to meet Michael and to tell him like how much I'm grateful about everything he has done. He has impacted my life
And
positively.
as grateful as you are, you're going to start with what you learned today.
You know, it was mind blowing because I've been seeing a pattern, especially a I've seen price reacting of new weekly opening up, and I was wondering if is it a key level or no? I was asking. I was watching Scout Sniper series last time, and I was wondering if new weekly opening up is a key level by itself. I was confused. I didn't have a clear. I was a clue, but not a something a knowledge. And I was wondering. So I am mind blown, bro. Like it was a privilege for me to know this knowledge because it will help me a lot. I will use it. I will use it for the better, man. I'm
Sorry, I
excited.
don't mean that.
I'm excited as well, man. So
Oops, sorry, I didn't mean to mute. I didn't mean to mute you. I just didn't want the echo. Jump back in, Simba. You're talking. You're doing great. I didn't mean to mute you.
okay, man. I know. I'm being. I'm a little bit nervous. So pardon me on that. So my question is like, I've seen, I've seen swing points formed like on a specific time, specifically on 9:30, and uh, usually I trade gold, so I usually see gold creating a, like an up close swing point, while silver does like down close swing point, and sometimes I see that swing point getting violated on one asset and not getting reached on the other on the other asset. So is it specifically a divergence? Can we call it a divergence? Is it an SMT by itself? That's my question.
If you look at that time frame, what is occurring on that time frame is it's hiding. On the lower time frames, you end up seeing actual SMT divergence. So one candle on, for instance, gold goes up and has an up close candle, but silver goes and creates a down close candle. And if you compare it on a lower time frame, you'll see it's a divergence there as SMT, and you can see this happening in forex as well. You can see it also happening in grains when there's years in the droughts where the crops in the U.S. are being heavily affected by the weather. All crops will go up, but usually you'll see what you're describing there a lot in the grains. And one market will create a low with a down close, but another asset like soybeans usually is the one that says no. That will be an up close candle. By the time frame that you're looking at, it just simply looks like one candle's fighting against the other one. But drop down to lower time frames and you'll see the very clear SMT divergence.
So funnily, like today, this happened in the morning in the London session. Price came back to the new weekly opening up, and it created like a swing point there. And finally, the same pattern happened in the morning, and I was wondering, there is something about this pattern. And thank you for the privilege, ICT. Thank you for everything that you have done. I am privileged.
You're welcome.
Thank you for Kit. You know, he's an humble guy and he's a nice dude. You know, he replies to my message.
High five.
Thank you, man. It's a privilege. I was wondering, man. I have like 50 followers or something, and I saw him like DMing me too if I got any question and stuff, you know. So I would like to thank you for your humility, bro. Thank you, ICT, for your humility and kindness. It's a privilege to be here. Honestly, it's been a privilege to be your student, ICT, and I've been privileged to study your videos and everything. You know, I listen to you more than I listen to my dad, bro. Like I spend the whole day studying your concept and everything, back testing, and listening to you, and I feel like we are family now,
You're
and
breaking
it's a
the
privilege.
rules.
It's a privilege for me. It's a privilege. Thank you, ICT. You know, I was. Let me say this for the
Okay,
last time.
Simba, come on, bro.
Uh, Last time I was trying to email him, you know, to say how thankful I am, and I thought he wouldn't see my email. So I was praying God to give me an opportunity to talk to you. Thank you, ICT, for everything that you have done. You've been putting a lot of a lot of things for free. It's a privilege for me, bro. Thank you so much.
You're very
High five.
welcome.
Next up, thank you, Simba. We heard from Blaster. We heard from Simba. I'm trying to get people up here. I'm trying to please see the proactive organization that we're trying to do, getting people up here to get to speak. If you want to speak, if you've spoken with me, I'm definitely trying to, help keep the flow of this going. Okay, everybody? So next up, Slick Rick's had his hand up for a second, and then we'll go to Gady. And yeah, Slick Rick, you're up next.
Hey, Kit, what's going on?
Not much, G. How you doing?
Good, good, man. From Miami, Florida, 42 years old today. So thanks for bringing
Happy
me up
birthday.
here. Thank you, thank you. Man, I just wanted to say how great it is to see every day. I'm in the charts every day for like a year now, and just seeing it go up and down from one new day opening gap to another, one fair value gap to another, and putting the quadrants on there and just seeing it, come to the tick, like you always say. And sorry, I'm out of breath. I'm a courier, so I'm currently at work right now. But just awesome to see it, like you say, go to the tick. And I've brought my brother in on this, another friend of mine that's in finance. For 10 years, he's been looking at the markets, and he's getting his mind blown right now as well because I'm live streaming my trades with him every morning, and
I
it's pretty
love that.
awesome. Yeah, it's pretty awesome. I did want to take the opportunity to let you guys know that I'm working on an app. I'm doing it for everybody that's on TradingView using AMP, and it's going to be like kind of like similar to the prop firm dashboards with
But
also a
but for
journal.
AMP,
Well, right now that's what I use. So
okay, no, that sounds pretty cool, bro. Did you vibe code it?
yeah, I did. I have no
Nice,
coding
dude. I like
knowledge.
it. No, that's cool. I like hearing. I mean, a lot of folks are vibe coding more and more stuff in the community. So,
Yeah, and it's something I would like to give to the community as well as to ICT and
yeah,
you,
dude.
Kit, because
Holler at me in the DMs, and I
for
would
sure,
appreciate you keep it there first before you bring it here. Okay, that
definitely.
goes
Oh,
for
of course, of
everybody.
course,
If anybody wants to bring anyone anywhere in the community, it's got to come through me first. All right. So, Slick Rick, you know the deal. Talk to me in the DMs, then we'll do it organized. Okay.
for sure, for sure.
Alrighty. Thank you.
And appreciate it, man. You guys have a great one. And again, just thank you for showing us, all these new things, Michael. It's really changed the game. The Wix this year and the quadrants was the game changer for me. Although I'm still new and still finding my psychological aspect, I'm getting so much better. Just learning to be patient and realizing that I've made all the mistakes you said.
So
Not
Rick,
to not to make.
do me a favor.
Yeah,
Tell Michael a
yeah.
little bit about your story. All right, like with you and your case specifically, I'd like you to talk about just talk a little bit more about you. Like, what are you doing off of the charts? Talk a little bit more about your story. All right, I
All
want to
right,
hear a
all
little
right.
bit more about you.
So give me like 2 seconds. I'm inside the hospital. I don't want to be screaming
All right,
in the
no, you're
hospital.
good. No, I got you.
All right, I'm walking outside. So I got born and raised here in Miami, and I'm 42. Not really happy where my life was. Probably in one of the lowest points in my life. And I'm a handyman by trade, and I also started doing Uber about a couple years back. I bought a Suburban, doing the black rides down here in Miami. Fun stuff. But just like everybody, we're on the grind, trying to make money, trying to advance. And I picked up this 20-year-old kid from the University of Miami, and it was crypto week down here in Miami, and so we started talking about crypto, and he mentioned futures, and I told him I told him I have no idea what that is, and he's actually the one that put me on to Michael. He told me check out ICT. So when I dropped him off from my Uber ride, I checked out Michael's channel and I fell in love. I'm not gonna lie, the video series that really got me into it was if I was 20 years old, what would I tell myself? And then the other one where he's talking the same
If
concept
I could
where
go back in time, I must
yeah,
see ICT
yeah,
the
if
playlist that I distributed just the other day, right?
exactly, yes,
Yeah.
exactly. Yeah, I was actually happy to see you
Those are
put
the
that
two, in
put
my
that up.
opinion. Those are the gems. I mean, those are my favorite.
Bro, that changed my whole outlook, man. It just made me see how real Michael really is, and I don't understand how people can nowadays even talk any shit about what he does or what he says. And if they do, it just shows you that they haven't even looked into his content, and we can just laugh at it. It's pretty funny. And so yeah, so I started. I literally
So talk a little bit more. All right.
yeah.
You got you. How many kids you got? Your
Well,
wife?
no,
What you're doing
I,
now?
I,
Continue.
I'm trying to start a family. I'm single right now, no kids, so it's giving me the freedom to actually. I've literally lived, eat, and breathed Michael's content for the last year straight. I stopped. I almost stopped working full time just to be able to study as much as I could, and devoted all my free time to it, and it was worth every penny. I
Yeah.
literally
As far as work structure, your workflow, what have you done within what you're doing within your day and within your life structured around what you're
so
learning?
yeah, so since I found Michael's content, I literally said, you know what, fuck this. I went and got a courier job. So I'm working right now. I work from 2 in the afternoon till 11 at night. I did that on purpose, knowing I took a pay cut because I make more money at doing what I normally do. But I said I'm gonna devote all my time to this. I'm so amped up to become a great trader. And so I literally took a courier job, working till midnight basically, and that gives me the freedom to trade the morning session and sometimes even the afternoon. So I've literally changed my entire schedule around so that I could trade. And so when I get home from work at midnight, I can study for an hour or two, prepare for the next morning, and also, a little Discord I'm doing with my brother and a friend of mine to get them in on this too, because literally anybody can do this. You just got to put your mind to it. You got to fucking sit down put in the work, journal, back test, pick a fucking model. Just pick one model. Don't overdo it.
So,
And
so how are you engaging with price right now? From what you've learned,
I'm a
what you've been doing, to what you're doing right now. Because I mean, anyone who's watching anything right now, everyone's implementing and deploying new stuff. But what have you been trading? I mean,
man.
after
So
today, I would say that.
yeah, I'm 2024 student, so I love the mechanical nature of the model. You go in, you're gonna either go for the premium or the discount, and it doesn't form every day. So when it doesn't form, I'm just literally looking for the highs and lows, either on a higher time frame, fair value gap, or the next level of liquidity. Low hanging fruit, people. Just like Michael says, especially in the markets how we are right now, low hanging fruit. And I did want to ask Michael something about. I've been having a hard time getting entries on the fair value gaps because they're just running through. Prices just running through. And he mentioned today in his lecture that he was showing Caleb how to get in on an entry on the reversal, like the Judas. I would love to hear him just touch a little bit more on that because I was listening to it, but it was just a lot to take in. So I would love to hear him, or if you could have any advice on that, that would be great. And I just had one other question after that I think everybody would appreciate.
Go ahead and ask it.
Well, so on the daily chart, when you have, let's say, a volume imbalance, but then on the same level of price, you have, let's say, a fair value gap a little bit closer in time. Are you using the PD array that's closer to time, or is like sometimes I'll want to grade a volume imbalance on the daily, that's where price is, and then a fair value gap that's also within range, and maybe even a wick. How do you decide which one of those PD arrays is going to be more salient or which one makes more sense? Because I end up having, now with the eighths, I have like 24 lines on my chart, all in the same vicinity.
Of what range of assume we're looking at NASDAQ. How
Yeah.
many handles away would one PD array be from the other?
Well, normally it's when they're basically sharing a range. Like, let's say 2,500 or 25,000, the CE is like the same or very close by, where it's 20 or 30 handles. Let's say you have a volume imbalance and then you have a fair value gap, and they're overlapping somewhat. Like,
Is the
how do
volume
you?
imbalance inside of the fair value gap?
A lot of times, yes, I've noticed that.
That's a suspension block. If it's part of the same imbalance, that's a suspension block.
No, I mean when they're separate. Like, there's a volume imbalance, let's say 7 days back, and then there's a fair value gap like 2 days back, but they align on the same price level.
Okay, if it's a question of whether or not a volume imbalance or a fair value gap or a regular imbalance, like SIBI or BISI, they're going to take
Right.
precedence over the volume imbalance because the volume imbalance is the most flexible one. It can pass through
Okay.
it multiple times.
Okay. And what about a wick? If we have a wick and like a fair value gap, for example.
The wick takes precedence over the imbalance.
Boom! There it is. Thank you, Michael.
You're
That
welcome.
was awesome. I've been
That's
struggling with
awesome.
that for a little while. I've been struggling with
That's
that, so
awesome.
I
Well,
appreciate it.
I'll say that core content month 4, order block theory. The top 50% of large range wicks are in inefficiency. Lower 50% are in order block, as taught by Michael. And you would be looking specifically for weakness in the lower third or strength on the top third, right? So, or top quarter, really. I mean, I say top 60% or lower 40, but I don't know. No, I do know it's
Um,
below 33 to 25 is how Michael clearly teaches it. So that's what it is. Hand up from, oh, look at the baby puppy. Lou Shiesty.
Yo, what the? Can you hear me?
Yes, sir.
Let's go. Um. Oh, what's the rules? Introduce myself, right?
Yes, sir. Here's the thing. Give us your name, your age, your how long you've been trading, and then how you engage with price.
Okay. My name is Luis. I'm 22, and I'm a custodian right now. I'm working right now, but I was
Rock
listening.
on.
So
Kudos. You're getting paid. You're getting paid to be here, bro. High
yeah.
five.
I basically just use NDogs and NWOGs for either drawing liquidity or an entry like break and retest. There's some good trades off that. But I just have a question because I took a trade today where I cut a short and the fair value gap aligned inside like a gray zone, and I put my stop right above the gray zone, and it like followed it right to the tick. So I was wondering if that's what ICT does because I don't think he's
When
talked about that before.
gray zone is that new? Gray zone.
It's like say there was a swing low, right? And there's two wicks that were pretty long. So the midpoint in between both of those wicks or gray pool, sorry, not gray zone.
Yeah, okay, now I know what you're talking about. I think
Okay.
myself, goodness, God,
Yeah,
I
sorry
don't,
about that.
I don't talk about zones, man. Zones.
Yeah, my bad, my bad. Well, I was just wondering if that's something you do because I don't think I've heard you talk about that.
Well, you had me a little bit confused when you were referring to the zones. So I'm trying to think of myself, what could he possibly be talking about?
My bad.
But I, give me another chance to hear what you're actually modeling. Like, what is it you were doing?
So basically, I took a short off a bearish fair value gap, and inside that fair value gap there was a gray pool, and I put my stop above that gray pool, and price to the tick hit the top of the gray pool and went down. So I was just wondering, like, I don't think that's random. So I was just wondering if that's what you do to play stops or not.
For the listener who might not know, predefine. You're utilizing the term. Now define it. What is a gray pool? Let's ensure you understand it as well.
Right. So it was a swing low that had large wicks. The first candle, I found the midpoint, and the swing low candle two, I found the midpoint. And basically, those two lines are a gray pool.
Nice.
What you're doing is you're looking for the consequent encroachment of two wicks to get like a sweet spot. So it's a gap within a gap, utilizing wicks. So yes, what you're outlining is something I've done before, and you can use it for entries. You can use it for managing stop losses. You can use it for partials. You can use it for pyramiding new positions. So it's not limited to just one trick pony.
That's almost like an implied fair value gap as well, right? Like the way you're utilizing the wicks.
Almost. It's the closest thing that would be. It would be very close to that in terms of characteristic. Yeah.
Okay, just for the listener.
Okay, man. Thank you. I appreciate it. I was just wondering about that.
No problem, bro. Thank you.
Well, I love it. I love you pulling out the vocabulary here. First, it was like veered a little left there on the zone, but came reared back around with the pool and clear, nice definition of the way wicks are overlapping, and you're finding the CE and the CE, and then that zone creates its own little pool as defined. Great pool. Bobby's got his hand up. What's up, buddy?
All right, can y'all hear me?
Yes, sir.
All right, how are you doing?
Pretty
Hey,
good. Hey, high
Michael.
five, my friend. I like that hat and that profile pic. Let me tell you something. That's a real G right there, bro.
We try. Hi, Michael. Nice to meet you, man.
Very nice to meet you.
So, I got a quick question. So yesterday we got a group chat, like a group, ICT group, and I was watching your month 4 video, the course on order blocks, and I had posted in my group chat saying you did not mark the week of the candles on the order block, and then one of my group members, who's one of your ardent students, he was arguing. He said Michael would never mark the body of the order block. Has to be the week. So I took a screenshot and I posted it in the group. I'm like, this is what Michael is doing. So they arguing with me. I'm like, argue with Michael. He's marking the body. You saying he would never mark the body. He only marks the week. I'm like, what? So I took a screen recorded of your video, your course I was watching, and I posted it. They're still arguing with me. So I'm like, okay, I was going to monitor you. If I see you in the spaces, I'm going to hop in that space because, I'm one of those guys that don't like to talk in spaces and stuff. I'm like, okay, I'm going to ask you. Like, do you mark the bodies or the weeks or your order blocks, or it doesn't matter?
So you were using a video from the 2016 paid mentorship?
Yeah, the premium.
Okay.
Yeah.
So you're looking at something that was limited to what I was willing to teach and only share at that time. There's a lot of things that I've also went farther beyond than I really wanted to initially. So just know that I have had bouts of being selfish. I've wrestled with it simply because there's a lot of people out there repackaging it, claiming it's theirs, saying they figured it out themselves. They've been doing it longer than me, all that stuff. And it kind of leaves a very bitter taste in my mouth because, like, I know they're all lying, but it's being pried from my hands from who gave it to me. So to answer your question, when you're using the if it's a short, stubby little premium side of the wick, and it's the wick above the body, or above, it's the top end, the high to the open or close. If it's a short little stubby one, I would more likely use the opening price or closing price in deference to whether or not it's a bullish or bearish order block. If it's a wick, if it's a long wick, I'll use the high of the wick down to consequent encouragement. Because if it's going to be bullish, if it drops down into that, what is it going to do? It's going to respect the upper half and not lay down a body in the lower portion. That's something I would not have taught in 2016 because that's wick theory and gap theory with wicks. So that was never in. It would have eventually made its way into paid mentorship, but because I had leakers and out there reteaching it and trying to sell it, I just pulled the plug on it and they violated the whole procedure and I was done with it. But that's how I would use the relationships of either using the wick or body.
Right. Because I consume a lot of like videos, ICT videos. A lot of them not from you, but your students, right? So-called students who become ICT experts, so to speak, because that's how they portray themselves.
Could I just add, Bobby, quickly? You want to go to episode 3? That's going to give you order blocks. Order blocks are going to be where the body and the open and the close are going to be the body, and the majority of the range is going to come from the open and the close or the body. As you proceed within and you're dealing with rejection blocks and you're dealing with episodes 10, 11, and 12 within order block theory of core content month 4, you're going to hear him talk about specifically about wicks and what he's saying now. And when the ranges are larger as wicks than they are bodies, and he talks specifically within order block theory and as he's mentioning wick theory about you utilizing the range of the body versus the range of the wick. So when the range of the bodies are equidistant, are close to each other, that's one thing. When the wick is extremely large on the high side versus a low small body, that's something else. So the story, the breadth that's being told through order block theory as defined by Michael, and he does talk about wick theory, is you looking at the range size of the body or the range size of the wick, and then how you're combining the open or the close with either or, the top of the wick and or the open or the bottom of the wick and the close. Okay. Is that okay, Michael? Suffice to say from your specifications in previous classes and lectures?
You're on point.
Okay. So just to be clear, if the candle is short and the weak rate range is higher than, I just want to know, like, basically if the weak can be respected or we mark
Say it once more. You broke up. I could not understand what you're saying. Say it one more time for me, please.
Okay, sorry. Just pause, man. So what I wanted to just get clarification on basically is there any point during the trade? Because there are times I've used the week for my order block and they've been respected, right? But I haven't gone as much as like measuring like the candle body or the size compared to the week. I've just used the week when I see it, right? So when I saw your stuff with the body, where you mark the body, I thought, okay, maybe is this like a new concept? Is this something I need to
Hey,
incorporate?
hey, hey, Bobby, can I refine your question to Michael, please? Can I
Go ahead.
refine it?
Yeah, thank you.
Michael, what Bobby is asking in intraday trading and wick theory, as you're teaching it, are there optimal wick ranges, either 4 hour, 1 hour, 30-minute, 15-minute, that you would utilize more so than another within us utilizing large range wicks within any form of higher time frame versus lower time frame intraday trade? Bobby, is that okay with the question? Did I
No,
ask
no.
that
Yeah,
correctly?
yeah, specifically intraday. Yeah, thank you. Yeah, I didn't
I
specify
think
that.
I think it's more appropriate for us to focus on where we're at in the price structure, where that order block would be forming. Is it on a gradient level of a key level like we talked about today? Is it
Yeah,
That's
like
such a great
close to the
point.
support, close to the support,
I'm sorry, say again?
close to the support, key level. Yeah.
Say it one more time. You're saying it a little too fast.
No, I
He
said the order block forming close to the support.
Okay,
he
forming close to a support.
yeah,
Okay.
Yeah.
he was agreeing with you, Michael. It's
Okay.
just muffling a little bit, but he
No,
was
Yeah.
trying
I'm
to in a
using an
muffled
AirPod.
sense. Bobby, unfortunately, it's a little muffled just with it actually sounds like you have a cigar in your mouth when you're talking to us and you're wearing a cowboy hat. So you have to take the cigar out of your mouth when you're talking to us. Otherwise, it's difficult to understand. Okay.
He's probably got a noise canceling microphone. There's a couple streamers I look at and they have that. It's like it only picks up like a second after they start talking. And it
Yeah.
sounds like that's what's
Is
going
is
on
it
with him.
better now? Okay.
Yes, perfect.
Yeah.
Okay, like it's my AirPod. My bad.
Okay, so kind of just start over, Bobby, because there was like 2 second delay in what you were trying to say. But no, I'm wait, hold on, Michael. Did you understand what he was saying? Really? Did you?
If what you were saying or trying to reiterate for him, if he's agreeing with that, then I think I know how I can respond.
Yeah, our order block forming next to the support. If it's best during intraday trading, if it's best to mark
Yeah,
the
he's
body
agreeing
or
with yes.
yeah, or the week, right? Or if the mini candle and the long week range doesn't matter, right? If that will still be respected, or I got to focus on the body to mark the order block.
Okay. All order blocks are not equal. So if we're looking at, say, for instance, you're watching a market and it's been trading down for a while, and you're anticipating it going into a higher time frame discount, and it's likely to turn and go higher. That order block that forms, once that forms, it'll do me a favor, put yourself on mute real quick because I hear myself and it's messing me up.
Oh, okay, sorry.
Thank
That's
you.
my bad.
So the idea of looking at an order block when they're deep in discount and you're getting ready to see the market go the other direction, you're really going to measure change in the state of delivery. So in that regard, where it's laying down inside the structure of price and where it's likely to start the inception of a new price run, then obviously it's the body because it's going to be the actual open on a down closed candle that when price goes back down to it after breaching it and going above it, whether just by wick, doesn't need to close above it. It just now that means that order block is now active. When it trades back to its opening price, that's where it's important. Now, any subsequent order block higher up past that one forming while still part of a buy program, something that's going to be sustained price run moving higher, those order blocks, they may have real long wicked premium wicks to the top of them. That is where I'm going to use the high of the wick to the consequent encroachment of the wick. I do not require it to trade back down to the body. Do you see how there's a disparity between the characteristics of a inception order block that starts the beginning of a real change in the state of delivery, a subsequent market structure will ensue,
that is not the same as a order block that forms after there's a real move underway and it's moving higher. So the change in state of delivery has been utilized, and now price is running. Any down closed candle, if it has a wick on the high end of it, I'm going to use the high of the wick down to consequent encroachment. But my stop, if I'm using it for like pyramiding and adding more, my stop has to be below that wick of that candlestick because it could use the entire range of that.
Got you. Makes sense. So the body for inceptional candle movement and price movement, and then when it's going up into the premium range, then the wick comes into play, basically.
It doesn't need to be in the premium part of the unrealized dealing range. That, in other words, where you think it's going to ultimately draw to. Don't think that rule applies only if it's in the premium aspect of that range. It could be any time after that first order block and change the state of delivery and price starts running higher. So in other words, you're still in the beginning stages of that run. The first one, when market structure shifts and there's a change in the direction of the move, that first order block, you have to key off of the actual body. It has to be the body. But then after it runs and starts moving, then you can incorporate just the wicks and not utilize the open of the candlestick. In fact, you want to see it utilizing the wick more because the gap aspect of a wick takes precedence over the order block.
Gracias, Michael. Appreciate it.
You're very welcome. Good question.
Yeah, this is a mastermind. I mean, I'm a long time follower, long time listener of Michael Huddleston, Mr. ICT himself. And let me tell you, boys and girls, gentlemen, ladies, today, wow, hot stuff.
One more, Kit, and then I have to close this one for tonight.
Yes, sir. Yes, sir. I like where we're going as far as the timing. I see where we're at. Last one. Poppy Trades, thank you for being in my DM and asking to come up. You get the last question.
Perfect. Thank you, Kit. Poppy Trades here, 33 years old. I've been trading ICT concepts since 2024, the 2024 mentorship. So I'm a big fan of first presented fair value gaps, opening ranges, mixing that with new day opening gaps and new week opening gaps. So today was perfect for using all those things to go short. Awesome stuff. Today's live was amazing in terms of just getting more visibility onto when to use SMT, because I know it's not something you talk about a ton ICT, so it's perfect to know that really when it starts happening during the opening bell and the opening range is a great time to actually utilize it. I saw it forming and couldn't really trust it and didn't trust it until I got the first presented fair value gap. That's when I started actually believing in it. And when I saw that the opening range today didn't fill also, well, it also filled on the opening range didn't fill on NASDAQ, but it filled on ES and YM. That gave me more conviction to go into the short. But my question is really regarding the inside days. It's something that I've been paying attention to a lot because you said that it acts like almost like a coil or rubber band that, will push price a few days after. Today, what would be the classifications in terms of the classic inside day, where it stays, let's say, inside the high and the low of the current day, stays inside of the previous days, and then what you spoke about today, where the body closure indicating it as an inside day. Do they act exactly the same, or are there any specifications that we should be looking for?
The idea is essentially the same, but it's not limited to. A lot of people that are familiar with classic ideas of inside day and outside day, they would look at what I said today and say he's in error because the inside day has to have a higher low and a lower high than the previous day. And I acknowledge that that's a truism, that is a classic inside day. But I have found in my own research that the body itself can give those same precursors in prognostication, really, that it's a compression. And like squeezing something very, very small and tight that has elasticity or expansion characteristics. When you let go of that and you free it, it's going to release its energy. Now, that doesn't provide directional indications at all. It just means that it's a magnitude precursor. It's something that's going to lead to volatility. So when I see these things in price action on the daily chart and intraday, when I'm watching price action real time, these same things are happening even on a 1 minute chart, a 5 second chart, 15-second chart. And if it's part of a run I'm looking for, then I know I'm expecting speed, distance, magnitude. I'm looking for big candles. I'm looking for a lot of excitement, a lot of animation behind what I already expect in terms of direction. So if you know what you're looking for in terms of direction, where the draw is, it's just helping lead to a event that may unfold for us to have a one-sided low resistance liquidity run condition. So it's the same thing. I hope I didn't confuse people today. And by you asking, I knew I'm probably helping others that may have the same thing that came in mind. Am I saying that there's something different, that they're used differently? No, they're used the same thing. There's just something that's indicating that there's going to be a one-sidedness that's highly probable, but because of the conditions that we're in high resistance. It could delay longer and just simply not come to fruition. But keep it as a rule-based idea, because when we move into more freer markets in the spring, if you ever see this event where the bodies of today is inside of the previous day's range, even if the wick goes above it in the terms of the previous day's high, or if the wick goes below the previous day's low, one side or the other, if the body is inside of the previous day's high and low, then that is an inside day for me, because the bodies are what? It's telling you the story. That's the real volume. The wicks are allowed to do the damage. So by viewing the candlestick with that lens, that perspective, we know that there's something coming, and it's a volatility event. So it leads to one-sidedness in the marketplace. So if you have a perfect scenario, low resistance liquidity run conditions, which we don't have right now, and we have this compression event where the body is inside of the previous day's high and low, we're likely to see it go lower. Then that would indicate we're going to likely see a sell-off day tomorrow or the next day. But because we're in high resistance liquidity run conditions, it may not happen. We may stay in a consolidation longer. And if that happens, that means we have to submit to more ugly price action and just keep it real tight with short-term scalps. But there's no difference between what you would expect with a classic inside day versus what I said today.
My mic was off. I said super, super clear. Thank you very much.
You're very welcome. That's a good question. I'm glad I was able to kind of like build on that, because I didn't want you to think, as a listener, to think that there is any real differences, except for the fact that don't exclude a day that has a body inside the previous day's range, because that in and of itself acts the same way as a classic inside day.
Awesome. It just gives us another way to view an inside day to give us more understanding of price, because that's always a little bit weird when that happens. You don't really, that's one of those things that sometimes you're not really clear where your bias is, because you're like, well, this happened and it went back in. It's not super clear. It kind of keeps you on edge. So it's great to know that we can view that as a classic inside day. And I'll go back and test it to see where that occurs and how that happens. Thanks.
I just want to add quickly for the listener, Core Content Month 12. Go back and watch those 4 episodes. You will see your classic V-shape buy model. You will see your V-shape down model. Looking at price in regards to up models and down models as taught within Core Content Month 12. Those specifications, that framework, I believe what was discussed today, it would be a really good foundation for those of you who might not or were a little lost in today's discussion. Go back and listen to Core Content Month 12, all 4 episodes, and look at your model and how you're timing it with the key levels and how you're stepping into that trade. Is a straight V-shaped recovery with the speed, or do you have to step into it with a first, after the engulfment, some kind of first stage or second stage market maker in which the wick then becomes salient, becomes extremely potent in where and how you enter a trade.
Hey,
So,
hey, Kit. Sorry.
yes. All right. Well, we're wrapping up here, but go ahead, buddy.
Could you guys just consider my question as a closing question? Maybe.
As well, I don't know. Why don't you just quickly just
Yeah. Yeah.
stay high five? Don't try
Yep.
and
Yep.
like
Yep.
discover new philosophy here.
Oh yeah. Got it. So my question is, Michael, can we take opening range gap or new day opening gap as a swing to develop a quadrant from there so that we can look back on the left side to align with the PD array within that gap, but on the left side. And if it's not aligned with the fair value gap, then we can just assume the price is not willing to reflect from that PD array and just it's gonna just close the gap. Or if it is not interested at all, it will not go to the gap because there is no alignment with the quadrant and the fair value gap.
I didn't understand what you said, buddy. I know
Me either. Me either, man.
I mean, bro, hey, you're going to hold on to that question and you actually get the penalty because you cut in line and you asked the question and no one understood it. And I appreciate you, but we're also going to be very respectful to the mentor today and say thank you, Michael, for your time. And I want to leave you with any final words for, our time here.
I had fun. I'm sorry we had to cut them shorter like this. On the weekends we got more time, but the
Yeah,
wife.
it's actually great. I mean, people get to go back and listen, bro. So, I mean, I think they're really, really good. Really, really good. I mean, and otherwise it gets tough for folks to kind of follow as well. So, having them a little bit shorter becomes a better digestible experience for the re-listen afterwards. So, I know that from trying to, go through it afterwards. So,
I agree. It becomes a daunting task to try to feel like you have to keep up with something instead
yeah.
of just relaxing and try to absorb the information.
And like if we do them honestly like a little shorter, it gives folks a little bit more time and a little less like stress because folks do get a little stressed about it, like I know they do. And it's just, yeah, I mean, that's what it is. So, I mean, the little shorter, this content, this format, I think is just chef's kiss. It's wonderful. So, yeah.
All right, folks. Well, I had fun, and I'm sure we'll probably have another one on Thursday, and I'll catch up with you then.
All right. Awesome. Thank you, Michael. Thank you, everybody. Do us a favor, give us a like, give us a share, and much love and respect, everybody. Have a great one. Thank you again, Michael. This is Trader Roundup ICT Mastermind. It's your boy Kit. We'll see you on Thursday. Have a great one.